Jake, real quick, remind us again exactly the position Teucrium has and how I, as an investor, can take advantage of several different kinds of, I believe it's products and commodity products via ETFs.
Yeah, so Teucrium ETFs, we are the issuer of four single commodity ETFs, namely corn, wheat, soybeans, and sugar. We have some of the best tickers, I think, on the street. Corn, easy to remember, ticker CORN. Wheat is WEAT, soybeans SOYB, and sugar is cane, CANE. So our roots are in agriculture, and investors looking for that type of exposure can consider our funds.
And then let's get right into sugar. We had the news a couple weeks ago that maybe or maybe not Coca-Cola may or may not be putting real cane sugar back into Coca-Cola. I mean, right now you have to buy the stuff that comes out of Mexico.
Correct.
How does the commodity trade based on that news? And I would imagine that's how I can access up or downside via the ETF.
Yeah, absolutely. So, with all commodities, when you get to the heart of the matter, it's all about supply and demand. And when you have news that a major producer, Coca-Cola, is considering using cane sugar, well, that could increase the demand side of the balance sheet. And so to the extent that comes to fruition, and by the way, we see that Coca-Cola is unlikely to do away with their high fructose corn syrup line, but rather launch another product that uses cane sugar, just like you mentioned, from Mexico, which, by the way, I love that Mexican cane sugar Coca-Cola. I'm excited to have it here domestically. But that news leads investors to say, well, wait a second. That's a lot of more demand for cane sugar. Maybe there's an opportunity to get that investment exposure. And you do that through the futures market, if you have a futures trading account, or you can do that through your brokerage account, traditional brokerage account, buying an ETF like cane, CANE. The cane fund holds the futures contract inside the ETF. So you get that futures price exposure through there. Now, the ICE number 11 cane futures contract is the global standard for pricing of sugar. I will say that while the Coca-Cola news is it's exciting to hear the potential demand for cane sugar, it's not necessarily, in our opinion, enough to tip the scales on the global supply and demand balance sheet right now. And so
why not? Let me interrupt you.
Yeah, so what's happening is Coca-Cola is huge, and I don't have the exact numbers, right? But they will use a lot of sugar, but it's not big enough to move the needle. We're talking about a major global industry when you're looking at the fact Brazil produces 35% of the global sugar in the world. India is about 25%. The United States, by the way, we consume all the sugar that we produce to the extent where we actually have to import sugar. Most of that comes from Mexico and Brazil. So even with the United States being a top 10% sugar producer, we're still importing sugar. The point I'm trying to make here is that these markets are huge. Coca-Cola being one company, can make a small dent, but unlikely to tip the scales. We do see right now globally that the sugar markets are roughly balanced. There will be a surplus this year, according to most analysts. It's going to get a little bit tighter. There might be a deficit next year, depending on weather. But even then, you're talking about weather and production across the globe.
I want to ask you about performance, and I realize that it's a snapshot in time. But year to date, 3 year, how has the ETF performed? And I thought the world had a sweet tooth that we could never supply enough sugar.
Yeah, well, it's true that we do have a sweet tooth. Sugar prices have come under pressure recently. Of course, we did see a commodity boom back in 2021, really in 2022, coming out of the COVID era with supply chain disruptions. That played into it as well. But globally, commodity prices have been coming down off the highs, and sugar has been participating in that downside as well. And again, the idea here is just finding the fundamental supply and demand. As sugar production increased, it was meeting the demand increases as well. And so prices continue to go down further.
Where do we import the sugar we import from? Is it from Brazil? Is it from India? Are the tariffs having an impact?
Tariffs absolutely will have an impact. So the most of the United States corn imports are coming from Mexico and Brazil.
Yeah, sugar.
Sugar, that's correct. The majority of the U.S. sugar imports are coming from Mexico and Brazil. So, we see some tough talk with both of those countries. But Brazil, last week there was some news that put a pit in your stomach if you're importing from Brazil. So we'll see how that plays out. Tariffs can have an impact there, which would just push up domestic prices, not necessarily the global price that you see in the ICE number 11. And so, understanding that the tariffs can impact your prices domestically, but not necessarily the global contract on ICE number 11, it bears watching.
I remember speaking with others from Teucrium ETFs in years past, and we did talk about the other commodities. I'm just curious, how are they performing? You mentioned that commodities in general seem to be under pressure globally, and yet we still have more mouths on this planet that need to be fed, and the United States, along with Brazil and Argentina, kind of the breadbasket of the world. So why would they be under pressure?
Yeah, well, fortunately for everyone who has to put food on the table, production has been keeping up with demand. And so that is just planting additional acres. If you look at Brazil, for example, they have been literally burning the rainforest in some instances to plant more agricultural land for production. That's helping feed mouths primarily in China, as Brazil is the number one soybean exporter to China. Soybeans and corn, by the way, their major world use is to feed animals. So that crop goes to animal feed, and animals are used to feed humans. And so the long story short is that we've been able to keep up with production. Now, you do have that demand that continues to go up year over year for corn, wheat, soybeans, and absolutely sugar. And so as that demand continues to increase, you just need to make sure that the production is there as well. Production is finicky. It's largely dependent on weather. And so from time to time, we do see these price spike as demand exceeds production, which, again, we saw that happen, in 2020, 2021, back in 2011 and 2012, and could happen again.
So consider me a novice investor when it comes to ETFs. I'm very old school with my investments and also very conservative. But with ETFs and commodity ETFs like Teucrium has pioneered, what are the key things a novice investor should pay attention to? And should my horizon be long-term? If it should be, define long-term. Should it be short-term? If it should be, please define short-term.
Yeah, we see investors come to our funds particularly for two different reasons. One, if you are a long-term strategic allocator, most of the folks with whom we speak are in that camp. They're looking for low correlated assets. What that means is they want something in their portfolio that's going to zig when other things zag. So if you look back at the stock market, for example, agriculture tends to be not correlated. So if stocks are down, agriculture might be down, it might not be down. In fact, we go back to the last 8 stock market corrections of 10% or more, and our agricultural index has outperformed stocks. So there's that diversification component. On the other side of that, there are the active traders who are looking for things that trend. And so when commodities are in an uptrend, they are volatile historically. Of course, this isn't for everyone, but for those traders that want to catch that momentum wave, they will actively trade these products. To that extent, we also now offer 2x leveraged, okay, not for your novice trader, but 2x leveraged product on corn and wheat, really trying to appeal to that audience as well.
As I wrap up, I want to get back to Coke, and I realize neither of us are on the board or in the boardroom at Coca-Cola. I have family in Atlanta, but that doesn't count. When might we see this U.S. version of Coca-Cola with cane sugar? Are they just going to take what they got in Mexico and rebottle it here?
Yeah, that's a good question. I do not know. If I had it my way, I'd have a cane sugar Coca-Cola made in the USA under the Christmas tree, but I don't know for sure.
To my family in the South, it's RC Cola. That would probably win out. I don't even know if they still make that. Do you know RC Cola?
I remember RC Cola. I haven't had it in years.
Let me give you the last word regarding not just the sugar, not just cane, the ETF, but commodity ETFs, specifically the agriculture ETFs. Where do you see us in 6 months?
In 6 months, I think you're going to see the agricultural ETFs right around the bottom part of their range and perhaps begin trending higher. That has everything to do with seasonal demand and production. The United States, we have one harvest a year, and that comes in the fall. Usually you see prices bottom out around that point and then start an upward trend. So again, if you're a short-term trader, that might be something to pay attention to. Not guaranteed, but historically we've seen that pattern play out.